Welcome to Monday's Targets in Focus. I'm Elaine Stenson. This trading week is the last one before the Christmas and New Year holidays. In the US, there are no doubts that the most anticipated event of the month, and most likely the last one that may shake the market before the start of the new year, is the Fed's meeting on the 17th and 18th of December, immediately after which the central bank will announce its decision as to whether tapering will be introduced. Naeem Aslam from Ava Trade in Dublin joins me on the line now to look at the dollar pair's forecast. Naeem, the euro rose to session highs against the dollar on Monday following the release of encouraging data on eurozone private sector activity. With this in mind, what are your 1, 3 and 12-month projections for the euro-dollar pair?
Thanks for having us again, Elaine. For the euro-dollar, what we're projecting for 1 month is 135, for 3 months 132, for 12 months 136. Now, basically everything is dependent on Fed Chairman Ben Bernanke and what investors are looking to, whether he's going to be a Santa or the Grinch coming this week. We are looking at 3 different scenarios. There could be a massive sell-off for the dollar, but the 3 scenarios are here. The sell-off could be limited if they provide a zero forward guidance. We could see, if that happens, we could see a more dramatic decline in the dollar, along with the new highs in equities would also happen at the same time. But if they taper in December and lay out a clear plan to reduce asset purchases over the next few months, then dollar we could potentially see a huge soar in dollar. The third scenario that we're looking at, which is in the middle ground, is that the Fed would come and they will say we're only looking for 5 to 10 billion tapering in December, and for further tapering they could say data dependent. That would be the kind of a middle ground on this one. But let's not forget that the Janet Yellen, she's going to be the chairman, and Stanley Fischer, we know is going to be the vice chairperson for the Fed. He is a bit of a hawkish person, and Janet Yellen is a bit of a dovish person, so there's always going to be a good combination of these two, which is also going to impact how they're going to place their policies over the next few quarters, and so in terms of the tapering, and if the tapering is tightening or if it's not tightening. In relation to the euro term itself, euro officials have already said that the eurozone is in a very slow recovery, and the data which has been released today is showing more divergence between Germany and France, with the possibility of France actually dipping down into for a second recession. And finally, what I wanted to say is the LTRO payment, which the central bank did last week for 22.6 billion. Another for this week. That's 3 times more than usual, and the largest amount since the second repayment of the 3-year loan. That has another impact on the euro as well.
OK, Naeem, and currently the uptrend for the pound against the US dollar shows that the UK's economy is in better shape, showing clearer signs of growth than the US. Next week, more positive economic data would be supportive of the ongoing bullish trend of the pound, but the highly anticipated Fed decision may make the market ignore any favourable reports. What are your forecasts for the pound-dollar pair?
For 1 month, looking at 160, for 3 months 163, for 12 months 166. And the reason is that, only last week there was the first time after a very long time that we saw a bit of UK data which came on the bit of a mixed side. But again, everything is dependent on the FOMC rate announcement. But at the same time, the UK economic report calendar is full with the fireworks as well. The minutes from the last Bank of England meeting is scheduled for release, along with consumer prices, employment and retail sales. So what we're expecting from Bank of England is a bit of a tinge of optimism, but at the same time we're not expecting any kind of a market moving news or anything like that, considering that the central bank had just released a quarterly inflation report, and what they're forecasting for, like, when the employment rate target will be reached as well. That's what we are forecasting for them. The recent improvement in the UK economy has simply made the policymakers more comfortable with the current level of a monetary policy.
And finally, Naeem, the yen has strengthened modestly in the Asian trading session, falling back below the 103 level. The yen is deriving support from more risk-averse trading conditions. Naeem, what are your forecasts for the dollar yen?
Dollar yen 1 month 103, spot 90, 3 months 105, and 12 months 106. The main factor on this one was the Tankan survey, which was released today. Japanese data can be considerable influence with this one, and then the economic data actually did come on the better side, despite the fact that we have seen a bit of a sell-off. But that's not the question here. I think the monetary policy announcement this week would be again another factor by the Bank of Japan. And the scenario that we are looking at is if the Fed tapers and the Bank of Japan, they kind of hold their monetary policy steady, the yen will become an even more attractive currency for long dollar trades.
Okay, Naeem, thank you for that, and we'll leave it there for today. Thomas Taplin will be back on Wednesday with more Targets in Focus, so do check back for that. Until then, bye for now.